Thanks for tuning in to Talking Point. I'm your host, Neeraj Shah, and this week has started off with a bunch of issues at hand, or bunch of conversation points at hand, which all of which would have a material impact if they play out. Not let me put it that way. And to talk about what the current state of some of the key variables of the market is and the impact it can have, and his hypothesis of how the last quarter will shape up. Aditya Narain of Great. Thanks so much for joining, and I hope all is safe.
All good, all good. Thank you.
Okay.
Thank you, Neeraj.
Aditya, the pleasure is ours. Great having you, Aditya. Aditya, what's your sense? There seems to be this big energy crisis that everybody is talking about, though the Indian coal minister has said that India is not in as bad a shape. How do you view that situation, and what could the repercussions of that be?
Firstly, I'd say it's probably not something that's necessarily very extended. I do believe that for the next quarter or so, it will be a talking point, it will be a tracking point, right? But beyond that, I think it will tend to ease off, both with a little bit of supply and I think a little bit of normalization as far as demand is concerned, right? What I would though say is that at some level, it is part of a slight continuum that you've seen over the last 6 to 12 months on the supply side, right? Whether it's been chips, whether it's been commodity prices, whether it's been agri prices, and now it's all boiled down to energy prices and energy availability, right? I think it tells you two things. One, at some level, globally, demand has turned out to be much, much better than what people expected. But at the same time, what you're actually tending to see is a disruption on the supply side, which goes well beyond what you saw in the initial phase, right? And to me, that disruption risk is reasonably significant, not necessarily in itself, but the fact that you've had a chain of these events, right? And I think this is something that could be a little bit of an issue for the market over the next 6 to 12 months. You know, a lot of our conversations around a lot of these issues was it's a 3-month phenomenon, it's a 6-month phenomenon, but all of this is tending to stretch out a little bit longer. And I suspect the fact that it's all piled up, it's almost stacked in series, right? And maybe you can have a situation that over the next 3 quarters, every quarter, one segment of the economy struggles because of this. I think that could be a little bit of a challenge. So I think the fact that it's all piled up, I think is a little bit of an issue rather than the issue in itself, which, you know, probably will see some pain in the short term, but will probably settle
out. For the globe as well, Aditya, or do you reckon that in order to
so Neeraj, I'll ask you when you ask the question.
Meet purposeful so that they're not
breaking up.
Aditya, can you hear me?
Now it's good, but I entirely missed the last question.
For the world at large, do you think that is the same script?
I would tend to believe it is a similar script. I wouldn't say it's the same because there are always some local elements, particularly with us being a large country. But otherwise, I think it's a similar script. Where I think the world is probably a little better placed than India is where I would tend to believe that the demand side probably is a little bit surer and more consistent than might be the case in India. And I think that is where, to some extent, the significant outperformance that India has seen over the last couple of months, you know, that could come under a little bit greater scrutiny, i.e. the supply side issues are somewhat similar. On the demand side, probably the risk is a little higher than with India than otherwise. And in terms of market performance, India has actually been a complete outlier. So I think at some level, the market risk could be a little higher. And if the markets are right, then it's telling you there's a really nice demand cycle that is picking up in India that's going to exceed what you see in the rest of the world. And I would wait and watch on that.
Yeah, it's a pertinent point because although the festive season sales and the surveys that have come out thus far from the big boys who are on with the festive sales right now, that the eventual outcome may not be as strong as they'd envisaged, but it still looks very strong. And maybe cars is not the correct barometer because of the chip shortages, but everything else seems to be hunky-dory when it comes to India. including the virus cases. So do you reckon that maybe Mr. Market is correct in assessing that the Indian economy will largely be unscathed because there is no telltale power crisis? Virus is not an issue as things stand right now, and demand seems to be fairly robust.
So I think that's a reasonable possibility. I think the place where I would actually look more closely is in terms of the demand aggregates. What we are seeing and where we have data points and we are most comfortable is the higher end of demand, right? Whether it is housing, whether it is cars, is the higher end. I saw some interesting data point which basically said there's been an upscaling that's happened in the aggregates across different consumer classes, right? So that in itself is very good, right? That in itself is supportive of markets and India being an outlier in the overall cycle, right? But I think one should not lose track of the fact that there is likely a lower end of the economy or the middle end of the economy, right, which is not doing as well and is probably falling back a little bit or not keeping in pace with what's happening at the other end of the economy, right? And this was a worry we all had when the pandemic hit hard, right? What's going to happen to the lower end, the number of people who are, struggling around the poverty line, the informal job space, right? I think so at some extent, the jury has come out saying that it's not been as bad as what people anticipated 6 to 12 months ago, right? But I would suspect the jury is still out in terms of what is the level of impact that's happened at the lower end, right? I think at the top end, clearly things look much better than what had been anticipated. They have a momentum that seems actually very significant. And I don't think that will get necessarily pricked, right? So one segment of the economy is necessarily doing it, right? And I think that's completely on track or ahead on track. It's what the impact on the lower end is what we need to be a little bit more watchful about, right? And whether it is enough to pull down the aggregates. So I think this is what this quarter will be interesting to see. And it will have some implications in terms of the market, right? On either side. It'll have bigger implications on businesses and stocks. So you could well have a car manufacturer which does, and I'm just taking cars anecdotally, but those at the top end or with the right products are doing very well. But those which are either with the wrong products or at the lowest end might not be able to keep pace. So I think the economy is split. The market could get more split now than it has so far.
Well, polarization has long been considered a bane in India, but people who ride it well have done really well. Aditya, simple question. Since the jury on rural is still out, but urban seems to be doing okay, do you think that is enough to help the aggregate earnings? Because we all know now that for earnings to do well, you don't need the whole economy to do well. Select pockets are good enough. Do you reckon earnings will continue to prove to be the antidote to all the other uncertainties that the market grapples with on a month-to-month basis?
At some level, yes, right? Because that earnings headline number is very strong, right? So I think there are two elements to look at it. What is firstly the composition of earnings, right? And what are the levels of earnings that you're seeing? In terms of the composition, I think it's important to note, like we've got about say 37% for our coverage in terms of earnings growth for this season. But you split out metals, right? Or you split out commodities and you split out the banks. That number looks more like 12%. Okay. And if you look at that 12% number on a 2-year CAGR basis, which is important because there's a base element, it comes down to 4%. Right? So I think that is what you need to be cognizant of, that guys who are doing particularly well and who are pushing up the aggregates, right, are doing it on either reducing credit costs or global commodity price support, which is a global phenomenon, which is not India. What is much more core is what's happening at the operating level. 12 is not a bad number if you look at what we've seen for 5 or 6 years, right? But the reality is it is 12 and it is not 25 plus, right? And again, most importantly, I think we do need to look at the trend line, right? Which is our 2-year CAGR, which is more modest. So I think this is where a lot of the focus should lie, right? So I think that's one element in terms of the numbers. The other is from a market perspective is what is the capacity to take misses, right? Right? Either in terms of absolute numbers or in terms of guidance, right? And at this point, if you see the last result which came out, which is TCS and the immediate stock price reaction that you tended to see, the misses seem to be mattering more than the guidance, right? And I think this is what you need to, and it's making an impact. It's not an environment where if there is a miss, people will just, not let it fall even that day. I'm not suggesting that stocks will fall for a week after that. I mean, they just might react for a couple of days or a day or two, and then it's setting up for the same trajectory. But the sensitivity to misses versus sensitivity to guidance, I think is high. We still have to see a situation where a company both misses and where guidance comes down a little bit. But my general sense would be you could see some misses in terms of earnings, right? I don't think people are going to pull back on guidance, right? Even if there is a miss, right? In part because there is a slightly new structure to the economy. There is a lot of, just remember, it's a chicken and egg story also. If you have a capital markets that is doing as well, okay? If you had savings that have come in because people spent less over an extended period of time, right? That is feeding some of the demand that you are getting. That is feeding some of the confidence that you have. And, again, materially, I think this is for the first time you're seeing a little bit of a wealth effect that is potentially playing through in India, right? So I think you have a bunch of disparate events, right? But I do believe that there will be sensitivity to numbers. I do believe guidances will actually by and large hold, right? And so it's unlikely to be a disruptive quarter in terms of market performance or in terms of stock performance. But there could well be a little bit of leveling out. There could be greater scrutiny in terms of what's happening in the broader economy rather than the upper end of the economy. But yeah, is it one of those make or break kind of quarters? I don't think so.
We can live with that. Since we're speaking earnings, just one more follow-up, Aditya, before we move on to a couple of other issues as well. You guys, credit due, you guys were amongst the most vocal, bullish voices on technology companies at a point of time when people thought that the valuations are pricing in the best, and the stocks have done phenomenally. My question is now, and having seen, maybe it's a day's reaction, maybe it's a couple of days reaction, who knows, but things may not necessarily come off, because we all know you go out on the street and try and get an IT vendor and you see the cost that they are charging because the demand is just so high for IT services. Do you reckon that we are reaching a peak of sorts as far as maybe valuations go, and it will only be earnings growth which will drive performance going ahead? Or could there be a further re-rating of IT multiples? Because nobody thought the same will happen in chemicals, and we know what's happening to some of the spec chem companies too. What could happen to IT?
See, so simplistically put, we think there is more valuation upside beyond earnings, which could also see some upsides, right? I say this because, and let's just break it up into demand and supply. Simple. I think from a demand side, what you're seeing is a global convergence of demand, as it were, right? Whether you're a small company or a big company, whether you're in America or you're in Nepal, there is just a dramatic shift that has happened in terms of how you're going to use technology, right? And that's much safer than just being an India only kind of thing, right? You're getting global demand. You'll get it from places you're now not known as places, quite honestly, right? So I think you're there, right? And you never, in my view, you seldom stand up against a strong demand side, okay, particularly in the early stages of it, right? As an investor, valuations, I think, tend to take slightly a bit of a backseat when you have a superb and a broad-based demand cycle, right? That's one bit. The other element is, which is the supply side, which a lot is being talked about how salaries are going up and how there is a shortage of people. And as you said, whether it's a vendor that you're looking at or a high-end technology guy, there is a challenge. Our broad senses, and we've done some, very decent work on this, is that that there is generally a shortage. That costs are tending to go up. You will have to pay everyone more. But where you're seeing these extremities of hearing stuff like people's salaries have gone up 100% or 200%, that is a small section where you are getting that challenge. The breadth of it, which is where the bread and butter of the business is also getting revised up. But there is supply coming. A lot of these companies have hired a huge number of people over the last 3 to 6 months. They're all on the training bench. They're all going to come into the market, right? So while costs will tend to go up, I don't think what you heard now anecdotally is the extremity of it, right? Rather than what is going to normalize literally a quarter or two down the line, right? And the third element is, which is reflective of demand, is that pricing, which used to be such a big thing, right, is off the table when companies are negotiating. It's when you need something, you're prepared to pay up, right? And these companies are likely to be the beneficiary of that. Now, it's not as there's going to be a huge earnings cycle, which, you're, 10, 20, 30, 40% upgrades, but I think you will tend to see upgrades. I think the resilience of the demand cycle will provide you support, because the longer you see a cycle playing, the more comfortable you are in terms of valuing it up, right? And in that, and I think most importantly, the Indian companies that we have out here, not only are they competitive in themselves, but their business models are the most competitive business models that are out there.
True.
Right? And I think if you just take that mix together, I would tend to be fairly comfortable with that space. You will obviously have these things like has happened on Friday, that there'll be some earnings misses and there'll be a period of debate. The guidance has not changed, right? And I think you must remember also, this is not like, it's not like a car. If you want it at a particular point, you don't get it, then you wait and something else comes along the line, right? It is at the end of the day an essential, right? In fact, I read, it's where you're getting CapEx cycles becoming into OpEx cycles. I think you're getting into that kind of a mode, that it's not about a lump sum capital set aside, right? Which can expand, which people have tracked. Rather, this is how you do business. It's like another couple of employees in your team.
That's a headline. It's moving from being capex to being opex, so to say. Thanks for that, Aditya. But yeah, I mean, it's a matter of pride for anybody who's an Indian to see an industry blossom and do so well on the world arena. It's quite spectacular, really. Aditya, a couple of other current present issues before we wrap up the conversation. Energy, we spoke about it briefly on the global context, but just a word really of what you have made of either the corporate conversations or ministerial conversations, or a combination of both when it comes to power, because we've had the Delhi chief minister say that, there is a shortage and we might hit a blackout stage soon. Coal minister told us that there is no such issue and it will stay fine, and coal supplies are not a worry. But power seems to have caught the imagination of all and sundry. After a long time, we're seeing power generators come into the spotlight. Actually, we're seeing everything which is anti-ESG come into the spotlight. Any thoughts here on this whole thing?
So we actually think it will tend to cool off. I think it will not be as extreme as is being made out in some cases. The fact that you have an overnight market, you have an exchange-based market which actually adjusts for all of this and allows the electricity to go where it's needed. I think that's great. That's work that's been done over the last 10, 15 years that is coming to play in a hot market. The fact that you have some capacities in Mundra which can actually be ramped up just with a little bit of import and a little bit of oil actually means that if the supply can come in, I think the problem with something like power is if you don't have it, as long as you have price adjusting mechanism, which enables supply to come, which you fortunately have now in India, I don't think it's going to be as disruptive, right? And these power things will be at the margin you pay for 3, 5, 7% of it. So it'll be good for power stocks. I don't think it'll be disruptive for businesses or economies. And so I think it's something that will blow over, and it's not a bad thing. It's good to be in a situation where 3 years ago there was no talk about power capacities and PLL being in the 50s to now in the 70s. So I think it's okay. Too much demand is not a bad thing. We suffered without enough demand for far too long to worry about some of these things. You'd rather be in this position than in another position. And to your point on the ESG front, I think what will happen is temporarily it will value up some of these so-called non-ESG or less ESG compliant stuff. But I think more importantly, whether the structural shift, whether the nature of the new capacities that come up, whether they are ESG friendly or not, I think that is the bigger question. And I think there we are on the right track, that what you will end up getting will be more sensitive stuff rather than a revert to old.
No, that's a fair point. And I think company after company, if you hear the thermal power company saying all our capacities are non-thermal, because even banks are not willing to finance the thermal capacities, that tells you a thing or two. Aditya, one final word. And the big divestment has happened on Friday, right? What does it mean for the whole divestment team in India? Are you as enthused? Do you reckon that the divestment candidates suddenly find new fervor in the minds of the investors? Or will people wait for an event to happen before they reprice the asset, simply because there could be a slip between the cup and the lip, as has been seen in history?
I think 2 or 3 things. One, of course, one of the themes we've been running in our strategy has been the PSU theme, and that has quite honestly played out quite well, right? Firstly. Secondly, I think if stuff starts getting lined up, I think there will be from a stock element. You don't have to wait for the announcement. You will start seeing more stuff go through, right? But what I would also keep in mind is that at some level, this along with BPCL, right, maybe Concord, these are the peak elements of your divestment story. After that, they are not big businesses that you are buying, right, which give you a huge entry into a space where you can then refix, right? So to that extent, I think there is a little bit of a story, but this is the sweetest part of it, right? If Air India had happened and there were 10, 15 other companies that people would want to buy as hard businesses, right, where they give you strong franchise, then it would have been one story. But I don't think that is necessarily the case. You have a handful of more companies which will change the fortunes of a company that buys them.
Yeah, well put. The calendar by itself is not necessarily multi-year, so to say, at least in terms of the nature of the business.
And it's the nature of the businesses.
Nature of the business.
And Air India changes, a BPCL will change, HPCL tomorrow will change. The hard assets that you're buying, right? Otherwise, a lot of it is smaller companies, land and stuff like that, which will not change the landscape as much.
That's true. Well, lovely having you, Aditya. Thank you so much for taking the time out today and speaking to us. And have a fantastic last quarter of the current calendar.
You too, guys. Thank you so much, Neeraj.
Pleasure was ours. Viewers, thanks for tuning in to this edition of The Talking Point.